Yo, what's going on, guys? Today we're going to be taking a look at gold shorts for this trading week. We're going to be breaking down a position that was taken on Wednesday, so actually a few days ago. The reason I really want to break down this trade, guys, is because I want to show you how simple trading an instrument like a metal is. You know, they're very volatile, and naturally many traders don't really understand how to trade these, the right way. And essentially, I just want to give you guys my take on how I trade gold and how we were able to capitalize on such a beautiful short position. So first things first is that whenever I approach the market, I like to start with a top-down analysis. Since I already did all my analysis, we'll just go with a daily, but usually starting off with the weekly or the monthly is not a bad idea, just to identify higher time frame zones. But we are in the replay mode here, so we're going to be taking a look at Wednesday of this week. I want to go down into these lower time frames here and pretty much start looking to see what gold is doing. So the first thing I like to do whenever I approach the chart is to just look at the overall direction of price. And we can start to keep this super simple. So one of the basic things that most traders learn is how to identify trend lines. And oftentimes a lot of traders neglect trend lines because they just seem so basic, or just very simple, and the thing is, guys, is that trading isn't actually meant to be complicated. Once you understand how to put all of these different components together, it actually gets very simple. The complicated part is us, our perception of it, our actions, breaking rules, things like that. But pretty much what we're going to do right now is just mark up gold like how I naturally would. We're going to identify some areas of interest, some basic support and resistance, and then we're going to look at essentially what made me decide to go for gold shorts. So the decision to go for gold shorts lies here. As you can see, when we look at price, you see price is making high. Price had made a high up here. And then after that shift in order flow, we see price making lower lows and lower highs. So once we see that shift, now we can clearly see hey, okay, the market has shifted from going bullish. Now we're clearly bearish, right? So here, once I'm looking at price, you see that overall the market has been pretty bearish. Now, there obviously have been a couple instances where, here, for example, we made a high, then you see price reversed, and then we made a low. And then from this low, pretty much so from a month, right? So from June 29th all the way up until July 20th, there was pretty much a 4-week period that price was bullish. But let's look at the facts, right? Price created lower highs here at pretty much the 1982 area. Now, you can have a perfect strategy in an imperfect market. So granted, if you see something like this, where obviously price did break out a little higher than that lower high on the lower time frames, it could technically invalidate that. But then once I go back up to the daily time frame and I just take a look at price from a bigger picture, then I can see, well, hey, we did break a little higher than our lower highs with the wick, but price never broke and closed above this key area, right? So in doing so, that's what I mean. You can have a perfect strategy in an imperfect market. This is considered imperfect. Naturally a trend, a lower high shouldn't be higher than a previous lower high. But with gold, there are some, differences to take into account with how price moves. And this is one of them. I mean, as you can see, this was definitely a fake out to induce buyers by breaking above this previous high on the low time frame, but then you can see kind of on the daily, it's just a wick rejection. So different time frames can be misleading. So it's always important for me just to verify the angle I'm looking at price, to go back up to the daily, for example, and just see how price is looking at that zone. Because something we can see on the 1 hour, for example, this is okay, well, look, we just broke this high, now we're going to go bullish. People would naturally want to look for buys above this area. total fake out, and then you see the bigger move was bearish. And you can clearly see that the bigger move is bearish if you were to go ahead and transition into a higher time frame like the weekly or the daily. So when we look at the weekly here, you see the weekly totally rejected this area and is totally respecting that as a lower high. But then on the daily, it looks a little different. So that's the value of using different time frames, right? So first things first, always start off on higher time frames and identify the major zones and identify the major trend. So once we've done that, we see we have a major zone here at 1982, and then we actually see that we have an open pool of liquidity down here at 1893, 1894 area, just based off of this low. So we see prices making its way down here. And essentially, we're looking for short opportunities. When I'm looking at the high time frame, if the high time frame is showing me, a bearish setup, you can buy back reversals, but the price is always going to give you the highest probability trade when you actually go ahead and trade with the major trend. So in this case, even just looking at the 4 hour, we see prices super bearish. We see prices literally just trending down, making lower lows and lower highs. That's good to see, like a trend within a trend. The low time frame trend that's like in correlation with the high time frame trend, that's a really good sign. So once we already identified these things and we have our directional bias set, what I really like to do is to get in here and identify different levels. Maybe the 1 hour isn't the best for that. So we can go here and pretty much I'm just going to take some rays and then drop them at some areas of interest over here. You can kind of see some lower time frame structure forming. It doesn't have to be perfect. We don't have to mark up every single zone that we see, but now we can kind of get a better idea of what we're looking at. And then now when I'm essentially looking for an entry, for a short opportunity entry, well, it seems like this is the last significant lower high structure zone that price is honoring. And the reason I say that is just simply because of this. When we take a look, you see that there's a lot of institutional candlestick behavior within this price zone. So within the 1912 to 1894 range, there is a lot of volatility and manipulation. So when we identify these like little key signs and we see these big body wicks, this is pretty much the market giving us a signal that, hey, there is a lot of liquidity. And all liquidity means, to keep it nice and simple, is money. So there is a lot of liquidity in this range here, and you can see that price has yet to wick fill this. A wick fill is pretty much when the candle bodies come down and they essentially mirror the size of the wick. So if the wick goes down to 1896, you can anticipate to see a 1902 to 1896 wick fill based off of bearish volume and bearish order flow. Pretty much the wick fill is just, the candles moving to fill out this wick with price action to the right of it. So that's pretty much it. Sounds kind of complicated, but not really. We're looking for a wick fill. So I'm like, okay, I've identified my major zones. I see what price is doing. Now what I really want to do is to go into the lower time frames and then start identifying lower lows and lower highs. So the same thing we actually did on the high time frame, I want to go down to the low time frame and do the same exact thing. So let's just kind of go based off what we're seeing here. Lower low, lower high, cool. I'm going to play around with some Fibonacci here. We can do it would be bottom to top, like that. I think we'll use this one here. It's probably a little bit better. Yeah, so something along the lines of that. And the reason that we'll go off of this high, and I mean, look, guys, you can really use your Fibonacci a million different ways. And I'm not going to sit here and tell you, oh, it's only right from this high or this high. You can kind of experiment and see what you like best. Obviously, you're going from a swing high to a swing low, or a swing low to a swing high. But then you kind of want to identify, like, which swing am I really looking at? what I would probably do here is that I always like to take my fib from the current swing low and swing high, the like price is right here, literally right here, and then kind of use this as a reference to gain an entry for my position. You know, you can use Fibonacci's to identify entries, exits, and obviously, you know, your risk. So ideally, guys, as you can see, this is, I've identified at this time, like, hey, like, okay, I want to go for a short, but it's still a little too early. I need price to go higher. So what do I mean? We're going to wait, and essentially what we're going to do is wait till Wednesday. It was like Wednesday morning. Okay, so we just actually passed it. It was right around here. Yeah, so this is a trade. So I actually did call this trade out. Another cool thing is that I just opened up my trading community and it's free. So essentially, if you know you want to plug in with a group of traders, and you know I'm giving away a lot of free value, communicate with other people, share ideas, discuss trades, that'll all be available in the Vibration FX trading community that is completely free. So I'm really excited about that, and I just began to make that public this week on Instagram. So also definitely follow me on Instagram if you guys haven't yet for all your daily and weekly trade updates. But let's get back into this. So here I like this zone. Price is looking very interesting in this zone here. You see this is kind of like an area of exhaustion. You see this is an area of interest. You see that based off the previous swing high to swing low, this is also a 382 fib level, just pretty much at 1906. I know it says 1905.94. We'll round up in 1906. So that's a round psychological level, and this is a really good area to start looking for entries. So now it's Wednesday, and we can go into the 30-minute. And you can see that price is starting to give some rejection here. Now, when executing, I really like to look at the lower time frames just to get that pinpoint entry. And then here, for example, you can see that in this area, we actually did get a lot of choppy, ugly candle behavior. Now, where I actually decided to enter was in this area here. So we'll just kind of box it up like right there. So in this area is where I'm looking for entries in the New York session. And actually, guys, I did personally enter right here. I always look for candle patterns to pretty much verify why I'm going to enter something. And I took a 1906. It was a 1906, if I believe. Let me look back at the signals here. Boom, 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 boom. Entry 1906, 950 on Wednesday. So that's essentially literally where I entered. You can see the time where like my cursor is, 950. I literally entered right here off the contact of this 382 level. And this is my entry for my gold shorts. This is a signal that I gave out for free to my whole community, and obviously to my signals room, my private group that I have going on. And also, guys, some cool updates with that. I'm beginning to start opening up intake. So if you are interested in mentorship, we have some really cool things coming up. But pretty much, guys, we have a lot of confirmation for gold shorts. As you can see, the higher time frame trend is bearish, and we're currently operating in a range of a previous lower high to our last lower low. So I'm just looking for some sort of confirmation to enter at another lower high below this that's at an area of interest. As you can see, this 1906 area was already marked up, and then it correlated with my fib level. So that's a lot of confluence. It's like, okay, good, I want to sell. And pretty much I entered here, and my entry became this candle pattern. And then my take profit was actually this open pool of liquidity. So you see that we have an untested area and price that we marked at 1896. That's my target. I want to look for that wick fill, remember, that we were talking about in the higher time frame. And pretty much I went for 100 pips, and I had a 20 pip risk. So this was a 1 to 5 risk to reward. Upon entry, price did go immediately in profit, but we experienced a lot of choppy behavior. The 5-minute isn't going to show this trade justice, so we have to look at the higher time frame because we're using the 4-hour and the daily and the weekly and stuff like that. So the 5-minute will be a little misleading. Now, when we just proceed and play out this trade, you can see exactly what happened and how this position was precisely accurate in using all these different confirmations played out. We're trading with the higher time frame trend. We're looking for entries at an area of interest. We're using support and resistance. We're trading lower highs and lower lows. So guys, this is just a quick breakdown on gold. obviously there's going to be a little bit more to it, but I want to keep it as simple as possible, just to, make it easy for those of you to understand that are like seeing trading for the first time. This is like your first trading video ever. I like to keep things simple. But guys, that's pretty much a spark notes, on what went into this trade. We're looking for areas of interest. We're looking for support and resistance. We're looking for correlation with fib levels. We're looking for higher time frame trends, and obviously we're using a top-down analysis approach, guys. So this is a trade. We called out the sells here, 1906. Take profit directly at the zone, and you can see that this trade was precise to the T with no drawdown and instant profit. So if you guys like this breakdown, definitely drop a comment and a like, and subscribe if you haven't already. Growing this trading community from the ground up with no help, so I do appreciate all the engagement and feedback that you guys give me. For more free trades like this, definitely give me a follow on Instagram at Mikey Trades with a Z. Same thing like my YouTube name. And if you actually want to be a part of my community and work with me personally, definitely join my Telegram group. The link will be in the bio, and I look forward to hearing from you soon. I hope you all have a great day, and I hope you learned something. Peace.